to write Disney War 2, the sequel. We'll see. Jim, what do you make of this? What do you make of what's happening? And are you surprised that Disney's pushing back?
Well, this is an extraordinary development. You know, I think it's worth remembering, as I wrote in Disney War 1, that Iger came to power as part of a shareholder revolt, but that was led by the Disney family. Here we have an outsider, one of the most prominent activist investors with a very impressive track record, coming in, demanding a seat on the board, wanting to have access to internal data on the company. No, I'm not surprised that Disney is pushing back, particularly at this delicate time when there's a board transition going on, when Iger has just returned, when they've had a disaster with the previous chief executive. I think the issue, though, is where does he go now? He's been rebuffed by the board, but is he going to actually set up a campaign and lead a shareholder fight? He's putting the pieces in place, which means this isn't going to go away anytime soon. We're just in round one. And,
we were talking earlier, how much does Nelson Peltz like or dislike Bob Iger?
Well, he said that he doesn't want to replace Iger, but he also said that he wants to, strictly limit Iger to the 2-year contract that he just entered into when he agreed to come back. I would say that's not exactly a vote of confidence. And there's a lot of skepticism that Iger can both sort of right the ship at Disney after what's gone on in the last couple of years and find a successor, a task which, I should point out, it's really the board's job to find a successor, but he will certainly play a role. And they have failed, monumentally at that in the recent past. So
just lay it out for us. What is, and because I don't think I've heard it fully articulated, the Nelson Peltz plan for Disney?
Well, all I know that he has said, primarily, is that they need to cut costs. They need to get more profitability. He wants to restore the dividend, and he wants to limit Iger strictly to the 2 years that he has left. Well, cut costs. Iger himself has said that he needs to cut costs. The last quarter's $1.5 billion loss in streaming is obviously not sustainable. But cost cutting at Disney in a creative industry at this juncture in the streaming wars, that's going to be very hard. I mean, the long-term strategy was to spend to achieve a dominant position in streaming, maybe along with a couple of others, then raise prices. But you're not going to secure a dominant position if you cut too much in spending. I'm sure, yes, some can be cut. Iger, no doubt, will cut. But serious cuts, enough to restore a dividend at this moment, that is going to be very, very challenging. And Peltz has not outlined any detailed knowledge of the entertainment industry, the streaming world, or exactly where he would target those cuts.
Hey, Jim, if there is a proxy battle, how much does that complicate what's already a pretty tricky job of trying to come back in and handle some big problems and some change in the way that Wall Street values streaming?
It's enormously complicated. From Iger's perspective, I would think the last thing he needs is either an activist shareholder breathing down his neck and wanting lots of information and demanding changes, and let alone a shareholder battle. But, the Disney shareholder base is bound to be pretty restless. I mean, the stock performance has been terrible. The last quarterly earnings report shocked investors. The market has turned, the sentiment has just turned with dizzying speed from, focusing only on how many subscribers do you have to profits, and, what's the average revenue per subscriber and where the profit's coming from. That's been a very dramatic and recent change. That's more than enough to have to worry about without having somebody, as I said, meddling from the outside.